What do you mean my speaker's not working properly? Testing audio. Yo, yo, yo. What up, gang? What up, gang? What up, gang?
Gang.
What up, y'all? What up, y'all?
All right, we got my boy John Roach in the house. Shout out to John Roach. He's been in
Yo,
crypto for a long time.
Yo,
Took a bit
what
of a break. Now trying to get back in the. All right, Dorian, come on, come on. I've seen you way too often.
Yo,
What up? What up? My camera working? There we go. I'm in. Okay. Let me just do one final thing to this slide. Boom. Yo, my internet is being mad choppy today, so we'll see how it goes.
Bro, same man. It's so upsetting. Bro, I was supposed to have a meeting today, yeah, with somebody from Swissborg, and like I don't know what happened, but I was just left there waiting for 15 minutes, and the meeting never happened. I was so gassed for that meeting. I have to chase that up.
Oh, due time, bro. Due time.
Yeah, man.
It'll happen when it's meant to happen.
Well, I mean, it's supposed to happen, and I'm gonna chase it up, and I'm gonna be like, why the fuck did you? Well, I'm not gonna say why the fuck. I'm gonna be very polite, but I'm gonna be like, why you leave me waiting for 15 minutes? Do you know what I mean? Obviously, probably like the people at Swissborg are busy and that, but we arranged it by emails and everything. I was so excited, bro. I was actually upset because I was like, oh, is this the part where I seal the social media influencer deal and then become a Swissborg affiliate? But the person I was supposed to speak didn't turn up. Happens.
Peak ones, bro. Peak ones. Happens, bro. Happens.
It's all good. It's all good.
Just make sure there's not bad people waiting to get in.
Yo, Mr. Harding, have you got people from your past who like you reconnected with because they saw you posting about stocks content or crypto content and they were like, oh, I'm into that?
Yeah. Bear. Bro, I've even had people that honestly came out and said, you know what, Mike, I didn't really like you. I didn't really like what you were doing, but I like what you're doing now.
Ex-haters, yeah. Nah, basically, my boy John Roach here, we met in 2015. I was doing a promo job, and then he was just like a customer. Then we hung out a few times. He went to uni with Matt James actually.
Oh,
is that correct?
Yeah.
And then I remember in 2019 I made a post on my Instagram story saying, does anyone know about crypto mining? And then he replied to the story, and then basically John's been in crypto for a while, isn't it? But then he took a break and
yeah,
man, it should be exciting.
Real OG.
Small funds, but you know, it used to be more. Bad times.
We got cricket,
Yo, it's the journey.
Amazing.
The journey,
yeah, that's
man.
it.
Yeah.
Gotta secure my future now. Kids and shit.
Gotta change. Well, it's funny that you say that, because what part of today's show is about creating your identity as an investor.
Yeah.
There's a lot of people investing, but they haven't got a plan. They're just like, yeah, I'm an investor. And it's like, okay, cool, but what's your plan? What's like your investment plan? Like, you can't just get in and just be like, yeah, I just put money into this. It's like, okay,
don't work.
but what are you trying to get to? Like when are you going to start making safe investments? When do you take your profits? All of that. Why is my laptop just being absolutely, it's one of them ones today, guys.
Trust me, I've had one of those days today, mate. So many technical problems. It's ridiculous.
We're on 15 so far. So the record so far was what? 24? I think the record's been.
Is that the record?
Yeah,
all right.
Yeah. So we're trying to go for that. Yo, Ninja, do you want to guess what is the bit that's causing my computer to glitch mad?
Guess what is it, like a certain software?
Nah, it's
GPU.
Let me just show you before we get started.
I was gonna say, are you mining?
I wish. I wish. So this is what's happened, Ninja.
Can you show me?
Just so everybody knows that I've tried. I've actually tried. Oh no, wait. Oh no. Wait, hold up. Go to it. Go to it. Come on. You can do it. You can do it. Nah, Canva's just, it's not backing. Basically, I tried to create a slide for you in it that said Ninja T and all like nice fancy writing, but it's just not having it.
Oh, mad. What are you actually using for slide? Canva.com?
Yeah. Oh, Canva's live, fam. Okay. Yo, Canva is. If you don't know Canva, oh man, Canva makes you question why PowerPoint even exists.
Mad.
Telling you.
Like, you know what? I totally respect your teaching style and it works for you, but I don't know if I could be a PowerPoint guy. Maybe I should give it a go.
Nah,
Slides guy.
It's easy. Yo, man like Mahi in the building. Okay, we're gonna give it 3-4 more minutes and then gonna get started. In that meantime, I need to get these slides to actually bloody show, because it kind of defeats the object of what I'm trying to do. Admit all.
Hey, we got my student Mono in here, got Mendez in here, that's cool.
Gang.
Chris APL, that's cool.
Yeah.
Gang.
Oh, do you know what might be peak? I might have to close down the Canva and come back into it.
Yeah, fine.
Oh, that clutch moment where you don't know if it's saved. I've done it. I've pressed refresh, guys.
Bro, how long have you consistently been doing this for?
What?
This Monday show?
You know what? I need to ask Morgs. Oh, I've done it again. I forgot to tell Morgs. I do it every week. I'm such a waste man. Babe, can you message Morgan, please? My phone. Yeah, just go on WhatsApp. He saved as MRGZ. And just send him the message. Yeah. Okay, cool. Let's get this started because there's everybody here now. So we've got 17 peeps. Let's get this show on the road. So first of all, little disclaimer. I am not a financial advisor. Anything you see on this show comes, obviously, I'm choosing my own words here. Okay, let's go. So anything you see on my show should only be used for informational and entertainment purposes only. Please do your own research. I am not a financial advisor. I do not intend to be perceived as a financial advisor. All investment comes with risk. If you're unable to mitigate the risk, please seek financial advice from a financial and accredited advisor. So what are we talking about today? Today, we've got a number of things that we're talking about. The main thing that we're going to be talking about is understanding your investment style. So really nailing down what's your investment style, what's your plan, how are you planning to take profit, what's your sectors that you invest in, what's your actual strategy for investing, because a lot of us, we are new to investing, and even people that aren't new to investing, they're just investing. They haven't actually got a plan. Now, if you're in it for money, that's cool. But if you're in it for freedom and to change your life, then unfortunately, you kind of need a plan. You can't really ever change your life if you don't have a plan to change your life. I hope that's pretty clear. So then what we are going to touch on also is we're going to also touch on the bond market, and we're going to look at why there is a $10 trillion asset bubble that everyone's completely ignoring. So we're hearing all this talk of, oh, we're in a bubble, da, 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 da. But what's been ignored is the $10 trillion bubble, which is in corporate bonds, being completely ignored, which is actually a massive crisis. It's probably worse than the 2008 financial crisis, but all the big media, all the big press, completely ignoring it. So we're going to get into that. The technical we're going to cover is the MACD. And yeah, that's pretty much the gist of what we're going to be going over today. So if my slides don't load, don't worry. I've got all of my notes in my notebook, so I might just have to read it from the notebook. Because what I'm gonna do is I'm just gonna mute everybody as well. Bear with me a sec.
Beef for you.
Participants. Why is it not letting me mute everyone? Oh, everyone's muted. Okay, I've done it all. Okay, cool. So you show us my orange book with all my notes in, please. Because Canva is just not trying to Batman's case. So if it's not trying to Batman's case, we'll do it old school, and we'll do it pen and paper, and we'll do it Q&A style, because you can't always rely on technology. So, you know, do what you can otherwise. So what we're going to talk about first is your plan, because that's probably the most important thing that we can ever talk about is your actual financial plan, and what you're doing day by day, week by week to actually achieve that plan. That was actually the wrong orange book, babe. The other one. And I need to have a plan to actually have all my stuff prepped and next to me at all times, which it was. There we go. Okay, cool. So in the notes, the book of notes. So yeah, one of the things that I wanted to touch on as well is boring businesses. So people often ignore boring businesses. And I really encourage people to not underestimate boring businesses. So I'm going to give you some ticker symbols and some companies to look at. One of them is a company called Fastenal. Now, Fastenal actually have the world's biggest distribution and supply the world's largest amount of nuts and bolts. So that might sound really, really boring, but when you take something boring, it's pretty much guaranteed to be solid. Now, when you take something boring as well, it's much easier to scale. So I don't want us to think small about these boring companies. I want us to think big. So nuts and bolts sounds like, oh, okay, yeah, that's a cool industry. But when you actually start looking at the direction that the world's going into in terms of space exploration and so on and so forth, and mining and so on and so forth, and understanding that all nuts and screws are used in all chip manufacturing, then you kind of start going, and if there is going to be this car EV revolution, they probably need nuts and bolts. So again, there's an investing thesis, which is under the idea that instead of rushing to a gold mine, the best thing that you can do is to actually sell shovels, because everyone at the gold mine is going to need a shovel. So this is another example of that. There's another one like that that you can probably check out called McCormick. And McCormick actually are one of the world's biggest distributors of seasoning and spices. So they provide all the seasoning and spices for pretty much all the major restaurants that create the food that we eat, because it has seasoning and has a nice taste. And again, if my audio is playing up at any point, just message me on the chat or on WhatsApp, and I'll be able to try and do something about the audio if it does play up, because I can see it's a bit jumpy from time to time. Cool. So then there's another one that you want to check out. This is an absolute golden gem. This should actually be for paid clients. This one that I'm about to give you is a company called Veil Mining. Now, Veil Mining, why might you be interested in them? Why might you be interested in mining? Because all of the batteries that are in everything require something that's come out of the ground. So if you have a mobile phone, a laptop, an iPad, an electric car, it's probably going to be using a lithium-based battery. So if there's going to be an increase in the amount of lithium that's going to be needed, in the amount of nickel that's going to be needed, it would probably maybe be a good idea to look at the mining that's going to produce that. So that's just an idea, obviously. So yeah, that's why I would say the boring companies sometimes aren't that boring when you actually apply the future direction of the future to these boring companies. Cool. So that's the boring companies. Next, what we want to do is we're going to start talking about this identity. So I did have some slides for that, but you know, The internet is just saying, computer says no, Little Britain style. So what we'll do is we'll move on to your investing identity. So what you want to really decide is, what type of investor are you? Are you a passive investor, or are you an active investor? So a passive investor is someone that doesn't really want to do that much research all the time. They don't really want to be looking at the charts all the time. And to be honest with you, passive investing is probably best for most people, because it means you make less decisions, you look at less information, you're influenced by less things, and therefore you make more money. When you're an active investor, you're actually more likely to lose money, because you're messing around with your investments all the time. You're trying to get into this, you're trying to get into that, you're taking your money out of this, you're taking money out of that. And that definitely applies to the crypto space. I would definitely tell you to make a decision on what type of investor it is that you want to be, passive or active. Then what we have is we have our index. Well, we'll go to the next one. We have the people that choose where their profits are going to be taken. This is so important for you to have in your strategy of anything that you get invested in, to decide before you've actually put the money in when you're getting out. Because if you don't have a plan for getting out, the money's not real until it's been actualized. So what do I mean by that? Like, it means you can have an investment that goes up by 200%, and it can be showing in your account £500,000, right? But if you don't take it out as profit, you've never had that money. So I hope that makes sense, because one of the things with this game is sometimes people get massive increases in their portfolios, but then they don't take any of that profit, and then we go into a bear market and that profit disappears. So it's important to have in your strategy a point where you're going to be taking profit. Now, how do you want to calculate that? You can calculate that either taking profit quarterly, you can take profit weekly, you can take profit monthly, you can take profit yearly, you can take profit based on percentage returns or price returns. Next is the type of asset allocation you're going to do. So the term that I like to use is unloading the clip, because I'm from the hood. So what does unloading the clip mean? Unloading the clip means you've got loads, you're saving money up month in, month out. And then what you're doing is you're waiting for a bargain season, like what we're going through right now, and unloading the clip on those stocks. So a great example would be, you're waiting for Tesla to get down to a certain price. The moment it gets down to that certain price, you're unloading the clip and you're buying it all up at that low price. Or you can do dollar cost averaging. Now, this is where I am going to share my screen, and I just want to share something really powerful with you guys in regards to dollar cost averaging that I wish I was shown at the start of my investing journey, which is, here we go. So this is something that I share in my financial literacy course, and just really shows the power of not trying to time the market, and of just dollar cost averaging, which is just basically putting in $200 a month or £200 a month into an index fund. And again, we're going to look at the differences between index funds and crypto and other things. So let's say, for example, there's 3 friends and they're all saving £200 a month, and they're investing in the S&P, which is the top 500 companies on the market. Now, each has saved and invested over the last 40 years from 1979 to 2019, but they all have different strategies. So in that time, there's obviously major market crashes. So there's the Black Tuesday crash, where the market crashed by 33%. There's the Kuwait war, which caused the market to crash. That's the first Gulf War, which caused the market to crash 20%. There's the dot-com crash, which caused the market to crash 49%. And then there's the great financial crisis in 2008, which caused the market to crash 56%. Now, hopefully you're taking the million thing away from here, that every time the market crashes, it actually recovers. It's not the end of the world. Although the media will tell you otherwise. So Tiffany, what she tries to do is she tries to time the market. So she tries to, every time that the market's high, she gets in on the hype because everyone else is talking about it. So what she does is she shaved £200 a month in a savings account, earning 3%, and then decided it's time to invest. It turns out her timing was terrible, because she got in every time on a high and then the market crashed. So this buy and hold strategy, she ended up turning over 40 years. She did well. She beat the bank. She turned her 96,000 into 663,000. So let me just read what's in the chat. Oh, audio's good. Video is shocking. Sorry about that. It doesn't want it to be. So Brittany buys at the bottom. So what Brittany does, instead of buying the top, she waits for the bottom. So she waits until there's a market crash. She waits until something's hit below the moving average or below a trend line. So Brittany has saved £200 a month as well. And she's waiting for the market to dip. Her £200 a month over that same time period, even in buying the lows of all the 4 crashes, she ends up returning 956,838. Now, this is what's very interesting, is look at the difference of someone that just invests every single month. That's an extra £386,000. So they're all doing the same thing, but they're just not trying to time the market. They just got one rule, one strategy, that is investing the same amount every single month without anything else. That's literally the strategy. And it's actually the most successful strategy. I just thought I wanted to share that with you guys because it's, yes, you can do the loading the clip technique, which I personally do, but I do that combined with dollar cost averaging. So don't do one, I do both. So I'm doing my dollar cost averaging. I'm guaranteeing that I'm putting in £200 a month. I'm trying to do £400 a month every single month. Then from there, anything extra, any surplus cash that I get from anything that I sell, anything that I do, and I made a bit of extra cash, got extra money come in, I save that, keep saving that, and I wait until market dips, which are normally in March and in December, January time, and definitely in August, September, and then buy them on the lows. So then I'm making even more profit on top of my dollar cost averaging. So I hope that one made sense for everybody. Okay, cool. So let's go back to the next thing. Yeah, it is funny. The simplest strategies always do work the best when it comes to investing. It's a bit of a paradox. You can have all these strategies in the world, but the ones that tend to work the best tend to be the most simple. All right, let's try and share my screen again because I think we might have a bit of better luck on the slides. Wait, okay, so I'm gonna have to do them like this. I'm not gonna be able to do them full screen. Okay, cool. So where did we get to? We got to loading the clip versus dollar cost averaging. So the next one is, what kind of investor are you? Are you looking for things that are already proven and tested, like the FANG gang? So FANG, if you don't know, that's Facebook, Amazon, Netflix, Google. Alibaba kind of is in there, and Microsoft is kind of in there as well. Are you looking for investments like that? Or are you looking for little penny stocks? Are you looking for things that, you know, you're trying to get in them before absolutely anybody knows about them? Whichever one you decide, it's important that you stick with that and you go heavy on that, and then you dabble in the other one, but you don't go very hard on it. So for me, I'm straight FANG gang, and I'll dabble in the occasional penny stock. Next is indexes versus ETFs. So an index is something like the S&P 500, the NASDAQ, the FTSE, the Russell 2000. And this is a combination of loads of companies stuffed together in an index. Now, the most commonly invested index is the S&P 500, and that's what's known as the market, and you'll always hear about it. Now, an ETF is an exchange traded fund, like where you've got a company that's invested in sectors. And I'm all about ETFs personally. ETFs like ARK, iBuy, which is online sales, Hack, which is cybersecurity. You've got TAN, which is solar. You've got MJ, which is marijuana. You've got what other ones is there? Hero, which is gaming. And what they do is they just select a small amount of stocks, maybe 4 to 50, and they just focus on those. Now, for me, picking my individual stocks using the rolling fours technique, what I do is I pick an index, I pick an ETF, and then I pick stocks within the ETF, and that's my investments. That's what I'm doing. If it's not in an ETF, then I'm not going to invest in it. That's my simple personal rule myself. It's not going to get my majority investment. I'll load the clip. So my loading the clip technique, that is for the penny stocks and the little odd ones that I find. Next is what type of investor are you? Are you a whale watcher or someone that tries to look for things on blogs like Wall Street Bets? Me personally, I invest in watching the whales just because they're the ones that actually move the market. So for me, it makes sense to follow them. Next is, are you a value and dividend investor? Are you someone that invests in companies because they pay out a dividend, giving you a bit of an extra passive income? Or are you someone that looks for growth stocks like Tesla, like Amazon, Neo, so on and so forth, giving you massive percentage returns, but not giving you the dividend? Next is your take profit strategy. Like we mentioned, are you doing it based on percentage? So are you going, okay, I'm getting into this company. If it goes up 100%, I'm taking this much out. Or if it goes up 500%, I'm getting out altogether. Have you got this plan in place? If you haven't, write it down, figure it out, and apply it to everything that you're doing. Now, again, if you want a strategy to figure out how you should calculate your percentage strategy, book in a session with me, and I'm happy to show you how you can calculate the percentage returns that you should get on average from pretty much any stock in the world. It's quite a simple formula to do. The same again with price. Or are you doing it based on time? Are you getting into something going, I'm going to be in this for 3 months. I'm going to be in this for 6 months. And this definitely applies to crypto. I see so many people getting into cryptos and they're just getting into them. They don't have any strategy for when they're getting in. I mean, when they're getting out, for how they're taking profit. And cryptos, being as they're even more volatile than stocks, you definitely need to apply a take profit strategy. Not necessarily taking all of your investment out, but at least taking some profit from your gains. So next is, are you high risk or low risk? So are you someone that just wants steady, continuous gains with companies like Facebook, like Amazon, like Apple, that you know you're going to get you 50, 60, maybe even 100% a year? Or are you someone that wants to take more high risks and wants to go, you know what, fuck it, I'm just going to look for the most random ass coins, crypto coins, and just go crazy on them, put £100, £200 a month into just random coins all the time and see what happens? That's very high risk. That's just basically gambling, but it works for some people. So, however, what you can do is you could do maybe a combination of the two. And that's what I do is, so I have a certain percentage of my investing budget is for high risk. So every single month I'll invest 20% of what my investing budget is into completely high risk things. So I'll be like, all right, cool. So my investing budget for the month is £400. That means at least 25%, at least £100 is going to go to some crazy ass investment that I just can't really, it's not that solid, and it might just lose me my whole £100. But again, doing that over a period of time, doing that 12 times in a year, you're more likely to have at least one that pays off, where versus doing it just once, and so on and so forth. So I hope that's making sense so far. Okay, so my screen has just stopped sharing. Don't know why I did that. Okay, cool. So next is calculating your risk to reward ratio. This is so important, guys. I cannot stress how important it is to have a calculated risk to reward ratio. So what does that mean? That means off each investment you're getting into, you need to calculate your potential point that you're getting out for your risk to reward ratio. Now, this is even more important in cryptos because of the gas fees. So let's say, for example, you're getting into a crypto and the gas fees are 65. So a great example is this CryptoKitties launch that happened today. Don't know if anyone's been following that. So CryptoKitties, it was $2 a coin, but it was $65 gas fee. So for me to actually make profit, because remember that gas fee is either side. So it's when you're getting the coin and then when you're transferring it to Ethereum as well, then when you're transferring it to fiat as well. So that's 65 times 3. So already I've just added £180 that I have to make from this £2 coin already, from one coin. So I've got to pretty much that I've got to calculate that into my risk to reward thesis. So I've got to calculate how much percentage do I need to even make profit. So what's happening is sometimes people are getting into cryptos especially ICOs, initial coin offerings, not calculating the gas fees, not calculating how much they got to spend to take money out to get into it. And then the coin is going up, but because they've not calculated how much they're putting in and how much they need it to go up before they're taking the money out, they've just broken even again, or they've actually lost money even though the coin's gone up in value. So that's so important to consider. Next is the rolling forward strategy, which is where you've picked the stocks that you're investing and then you learn how to day trade those specific stocks. So I do my weekly calls, kind of touching on that every day. Just message me if you want more info on that. And next, pretty much probably should have been the last topic that I touched on, is money versus freedom. Just really understanding and asking yourself, like, what are you in this for? Like, why are you investing? Are you investing because you want to make a bit of cash, or are you investing because you actually want freedom? If you are investing because you want to make freedom and you want freedom for yourself and you want to be financially free, you're going to take completely different risks to if you were investing just to make money. Now, at the start, obviously you need high growth strategies, but you also need a discipline and a part of your portfolio that's actually going to act as a storehold of wealth. So let's say it's all good making 100, 200K off an investment, but then if you're then just blowing all that 200K and not putting it into a safer investment, then you're going to lose it. And this is what happens to the majority of people. The majority of people come into money, not necessarily even through investing, just in life. We come into money and then 10 years later, haven't got it. We see it all the time with footballers, musicians, people with businesses. We see it all the time. People win the lottery. We see it all the time. Now, next is defining what sector you're a specialist in. Now, the reason I tell people to become a specialist in a sector is because you're going to research that sector because you're interested in it. You're going to like know it better than anyone else. So if you're into cars, become a sector specialist in cars. If you're into gaming, become a sector specialist in gaming. If you're into graphic design, that make that your sector special. Like if you're into building and you're a builder or in construction, be a specialist in that because you know more about it than anyone. You know industry changes better than anyone. You know laws and regulations that are coming better than anyone, so you can see the direction of where that industry is going to go. So say for example, for me, I'm really interested in tech. So I need to decide which part of tech am I interested in, because tech's not just tech. There's pharma tech and there's tech finance. So for me, I'm interested in the tech finance side of things. Now, inside the tech finance, there's still even more subsectors. So there's financial processing, and then there's financial investing. I'm interested in the financial investing side. So I'm going to look for stocks that are based around financial investing. And I've done that with Square. And I'm interested in learning about this company because it's something I'm actually interested in. So I don't mind reading about it because it relates to my business, which is teaching people how to invest. So I need to know about these platforms anyway. So I hope that one makes sense. Cool. So let's move on now to the next part of the session. Oh, let's just admit back. So the next part of the session, what we're going to be doing is really understanding this bubble, this whole bubble situation. So this is about to get pretty deep if the slides let me share the slides. Okay, cool. So one of the things that's been talked about by the big boys, my favorite boys in the game, which is Burry, Buffett, Munger, and Dalio. If you do not know those names and you're new to this investing thing, write them down. You need to be following these guys like hawks. They are the best in the game. We've got Ray Dalio, who is one of the world's biggest asset managers. In fact, the Bridgewater Associates was the world's biggest asset management company at one point. He had several trillion. So follow him. He's got a great book called Principles. He's also got the video on YouTube explaining the economic cycle. Incredible guy. Then we've got Charlie Munger, who's Warren Buffett's best friend. And he co-manages Berkshire Hathaway. If you don't know who Berkshire Hathaway is and you're new to investing, Google it, research it, find out about who they are. Next one is Michael Burry. If you haven't seen the film The Big Short and you're in investing, please, please, please go on Netflix and watch the film The Big Short. You cannot be investing and not watch The Big Short. It's about the 2008 crisis and what to avoid, what kind of companies to avoid is literally the blueprint of that film. So The Big Short, and the main character in that is Michael Burry. And Michael Burry is the guy that predicted the 2008 crash. He predicted the GameStop spike. And now he's predicted, along with Ray Dalio and Charlie Munger, they've all suggested that we're going to be entering another lost decade. So what is a lost decade? A lost decade is basically a 10-year period where the price of stocks don't actually create new all-time highs. They do temporarily, but then what happens is they crash, come back up, crash, come back up, and they just basically move sideways. So we can see that it happened before in the past. It's nothing really to worry about. And this is also why you want to be diversified and not just be investing in stocks. You want to be investing in crypto. You want to be investing in companies overseas, because if the US market crashes, then you want to make sure that your money is still growing. That's definitely the case. Again, on my free course, message me for my free course, but it's got a great video on there showing the difference between, because we're born in the UK, or most of us are born in the UK, or we live in the UK, a lot of us invest in the FTSE. And we invest in the FTSE because it's advertised to us, especially by Hargreaves Lansdown. But when you actually compare the performance of the FTSE to the S&P, to the NASDAQ, to an ETF like ARK, you will be terrified that people are even doing it. So yeah, check that video out. It's on my course. If you want the course, hit me up on Instagram at I am Mr. Hardin, and I'll send that out to you. So yeah, definitely want to check that out. Now, again, the 10-year thing, how does it work? So let's look at some of the years where it's happened in the past, because it has happened before. So history tells us if it's happened before, it can happen again. So the stock market between 1929 and 1954, which is this one here, it actually ended up staying at the same price. So we can see it didn't really get past it. And then the same thing happened between 1968 and 1978, and then most recently between 1999 and 2008. So we had a massive high in 1999, the 2008, and then it crashed in 2000, the dot-com crash, and then it built its way back up, and then 2008. Well done. Guess what happened in 2008? Loads of bullshit with bonds, which we're going to get into in a second. So what causes a lost decade? A lost decade is caused by people not looking at fundamentals. It's caused by not just retail investors not looking at fundamentals, but also big analysts just completely ignoring the data and just being in complete delusion. And we're going to touch on this today because I've done loads of research on the great coal delusion. So at the moment, all the data is suggesting that, I'm going to show you, it's actually terrifying, that how all the data is suggesting that coal is completely dead. Like, it's not making any money. It's not going to make any money. And it's not just coal. It's cars in the car industry. It's some of the finance industry. These traditional value stocks just aren't working, but people are investing in them because they're not reading the reports. They're just going, oh yeah, it's a good company. And this is where this bond thing is going to get very, very interesting. So what happens with the cycle of how the lost decade starts? So what happens is we have high interest. Now, why do we have high interest? Because at the moment, the interest is really, really low because the governments are trying to encourage savings and spending. So at the moment, the interest rates are really low, but we know they're not going to stay at 0% interest for 5 years. That's stupid to expect that. Now, what then happens because of this, when the interest increases, the prices increase on things because companies need to make more money. Now, because they increase the prices, they get lower sales. And because they get lower sales, they get lower revenues. And because they get lower revenues, the price of the stocks come down. And because the price of the stocks come down, more people decide to hold their cash or invest in cryptocurrencies like Bitcoin. And then because of that, the interest goes higher. And because of that, they have to pay more on their debt, which then causes them to increase their prices even higher. So we can see how the cycle just continues and continues and continues over a 10-year period until companies actually sort out their shit, basically. Okay, cool. So now things that Ray Dalio and Charlie Munger are saying. So we can see it's quite clear what they're saying. Ray Dalio is saying that it's all caused by, well, actually I've written out what they say. So there's just some articles. and the kind of things that they're saying. Let's go to, come on, load up, load. Ah, there we go. Okay, cool. So what's Dalio saying in that article? He's basically saying that what's happening that we can clearly see is a slowed consumer demand. So yes, there's going to be this great reopening and everyone's going to go on holiday again and everyone's going to spend all this money and la 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 la. But how long for? Because as far as I know, no one I know, as soon as they're allowed to go to Disneyland, like next month or the month after, is going to Disneyland. That's not people's priority, as far as I'm aware. Like, a few people will do it, but what's going to happen is people are going to do it based on debt. People are going to repeat the same mistakes they made before, get out credit card loans, and do it based on debt. Now, what will then eventually happen is the interest rates will go up higher than they've ever been before, which will cause people to not be able to spend based on debt, because that's what causes these problems in the first place, which again, Daddy was saying will slow profits down. Some companies will die and the banks will bail out dead companies. Now, this is the problem, is that some of these companies that should be dying financially, when you look at their reports, are not dying. It's like seeing Bambi or a deer get run over and giving it mouth to mouth. That is literally what's happening. Like, why are you even giving mouth to mouth to this creature or to this animal? And this is what's happening. People are just desperately trying to save companies that are clearly dead, that clearly they haven't innovated, they haven't brought anything new to the table. Like, it's just time to let them go. But the banks are still bailing them out, still bailing them out, still bailing them out. And when we get into this bond thing, you'll see in a little bit more detail. So Munger is basically saying stocks and bonds have artificial interest rates, and we have an artificial money supply, which we can see because basically the government's handing out free money. So the money that's going into these stocks that is making some of the stocks, not all of them, remember, the value stocks, is making people think that, oh yeah, the price of this thing's going up. But is it going up actually? Or if you removed all the free money that you were giving away to people, would people still be investing in it? Probably not. And then what's also happening is people are betting on borrowed money with borrowed money. So people are taking out loans to bet on companies that are taking out loans that they can't pay off. So it's pretty much a recipe for disaster. And it's not just people like retail, like us. This is like big banks are taking out billion-dollar loans, $100 billion loans off other banks to bail out companies that are taking out loans from other banks to pay off their debt from 2008 crash and their debt from now. And then what's also causing the problem is the crypto vacuum. So if anyone wants to shout it out, does anyone know what the current market cap of Bitcoin is?
I know it's like $1.1 trillion.
$1.1 trillion. So that 1.1 trillion probably was somewhere before it was in Bitcoin. Now, does anyone know what the entire crypto market cap is? Ninja, you probably know that.
Yeah, it's like 1.7 trillion.
It's 1.7 trillion, estimated to triple in the next 5 years, probably even more. So that 6 trillion, what's it coming out of? The market. So why is it coming out of the market? Because the investments you can get on crypto are quicker and they're bigger, period. Like, you can't deny it. Like, yeah, you can get it with some stocks, but overall the crypto market is way more volatile, but again, doesn't provide some of the security that some of the stocks provide. And this is why I recommend to people to have both. Make your quick money off your cryptos, put that money into stocks so that it's still growing, but it's a little bit more safer. Cool. So hopefully that makes a bit of sense. So we was going to touch on the MACD, but we're into this bond thing, so let's keep going with it because it'll all flow and make sense. Okay, so bonds, something that when I was in school, they didn't teach about bonds. They just didn't. The only bond that I knew about was James Bond. I never knew about any other kind of bond. Just mute everybody.
Up until I saw you getting bed.
There we go, just muted everyone again. So yeah, in school, I didn't learn about bonds. Write in the chat, yes, if you learn about bonds in school, because I personally didn't. I've not met anyone that did either. And it's crazy to think that they're out there, but we're not being taught about them. It's very rare that we have a friend that knows all about bonds as well. And it's just one of these investment vehicles that's there. So yeah, nope, nobody learned about bonds, which is bizarre. So the name is bond, corporate bond. So what's actually happening at the moment is a bond is basically a way of issuing out your debt. So debt that you have, you issue it out to the public, aka other banks and retail traders, to be able to buy that debt in a promise that you're going to pay back that debt because you're a good company. So, but the problem with this is that some company are issuing out bonds from 2008 with bonds to pay off their 2008 bonds with new bonds from COVID. So the entire bond market at the moment is worth 10.5 trillion. And unfortunately, there's not exactly a sudden rush of money going into the bond market. If anything, there's a sudden escape from the bond market because it's very, very slow. And these companies that have got these bonds, are they doing any innovation? No. What they're doing with the money that they're getting from these bonds is they're doing stock buybacks. And they're doing stock buybacks, which then makes the price go up and makes it look like, oh, the company's doing well. Let's get into the stock because it's doing well. But what's happening is the company and investors think it's doing good. But when you start reading the reports, you realize, oh my God, this company is in a bad shape. So let's give an example of the kind of thing that happens with this bond situation. And then we'll give a hypothetical scenario of what can happen when the shit hits the fan. And again, sorry about my language on this one, but it's quite a pressing issue. And I think it's going to be worse than 2008 when we actually really understand. And this is why financial literacy is so important and why I love doing this and sharing this kind of information, because no one's educating people on bonds. Really, it's a bit of a crazy thing. There's a video that I'm going to share if you want a more detailed understanding of what bonds are. There's a video that I can share. So basically, what happens is a company is in debt, and normally a company uses debt to actually grow the company, to build new factories, to invest in research and development. And what happens is the lender comes along and goes, you know what? I believe in you. You're a good company. Here's some of my money. Go and make whatever you're going to do happen. I believe in you. Similar to stocks, but what happens is the company then says, you know what? Thank you for believing in us. We're going to give you a little bit extra to make it worth your while. And what happens is every single year they give out a bit of money on top, kind of like a payback. It's very similar to a dividend, and it's called a coupon. So the coupons are paid yearly and they're a fixed income. So let's say, for example, you take out a bond, £1,000 bond, and you've got a 1% fixed income on it. That would mean that you're getting 1% of that £1,000 every single year. That's it. That's the return that you're getting. It's really, really slow, but it's secure because the company is promising, as long as they don't go bankrupt, that after if it's a 10-year bond, 3-year bond, 5-year bond, you're going to get this fixed income off them. And at the end, they're going to pay your money back. So it's like investing. It's like a really secure way of hedging your money. However, if the company's bonds switch from an investment grade bond over to what's known as a junk bond, a high yield debt bond, where their credit rating goes down and they can't make debt payments, they now become a junk bond, and then the cycle begins, and then the company can crash and implode. So what happens is sometimes these bonds get into a situation whereby their debt is so high that how do I explain this? I've actually written it down. Hang on a second. Written it down so a way that I can explain it. Okay, yeah. So let's say, for example, the company's debt is 1 billion, right? and they've issued out £1 billion worth of bonds. So they've issued out all these bonds, hedge funds buying them, retail traders are buying them. But then the interest rate goes up, and it's currently 0. And we've clearly identified the interest rate is definitely going to go up. If the interest rate on $1 billion goes up by 1% per year, someone do the maths. It's not good. Anyone want to do the maths? 1% of $1 billion?
1% of $1 billion is 10 million.
Mm-hmm. So what then happens if the company's revenue doesn't even meet that 1% growth? Bit of a debt problem there. Then they end up in a situation whereby they actually can't ever pay off the debt just because the interest rates changed on their debt. So if they can't ever pay off the debt, what happens to the bond? They're just screwed. Now, this is why this is dangerous, because there is tons of these companies that are in this situation, and they're called fallen angels. So fallen angels are basically when your company goes from having an investment grade bond to a junk bond. And again, we'll have a quick look at this. I've lined up some for us here. Some of these brand names you may have heard of. The top 6 fallen angel companies. Okay, man, load up. Okay, so after they go through this fallen angel stage, whereby their bonds are now junk bonds or shit bonds, this is now where they then become a zombie company, because they're literally alive, but they're dead. Like, they're not making any money, but people are still investing in them. And instead of investing in innovation, they're just walking around pretending they're doing something productive, which is where I'm going to show you this coal situation. And unfortunately, the governments are kind of in on it, as per usual. Okay, so one of those fallen angel companies, Royal Caribbean Cruises, had their bond rating down. So they had a BBB rating. They now have a BB rating. Services Properties Trust, that's another one, had their rating downgraded. ZF Friedrichshafen, don't know who that is. This is just loading ever so slowly. But you'll be happy to know that there's over 50 companies that had their bond rating deranked in just the last 3 months. So yeah, things are slightly speeding up in this deranking of these bonds. So let's have a look at one sec, guys. I just want to show you, just to wrap it up, I'm just going to show you the extent of the lack of innovation of some of these companies and how badly they are lying about how well they're doing. So let's just go to this. So we're all here probably pretty keen on this whole solar, wind innovation thing, right? I hope we are anyway. I hope no one here is pro coal and like, yeah, coal forever. Yeah. I doubt that. I don't hear anyone from our generation really talking about that. Now, what's actually happened is, you know, like how there's you can invest and trade in wheat and oil, and there's an oil price index. There was previously a Dow Jones coal index, but you can kind of see what happened to that. It kind of went down the shit. And it just got lower and lower and lower. And then what ended up happening was it got removed. So that's kind of your first warning sign that they removed an entire index for coal. Like, what the hell? And this here is the projections of what coal, of what nuclear should be doing, versus what it's actually doing. Should be doing. Oh no. No. Oh damn. Bear with me a sec, guys. Okay, yeah. So basically, this is slightly more advanced stuff. Hopefully, it doesn't go quite over anyone's head. So this information is from the Energy and Information Administration from the United States government. So this is basically where they calculate the capacity and the amount of coal that should be getting used year on year and the price of it. And we also have information based on the levelized cost of energy. So it's basically how much energy should cost and how much profit should be made by these companies and the industry because of the price of coal. Now, what they didn't factor in was the fact that solar is actually decreasing in price by 45%. And so around 45 times. I've got the data here, I'll show you. And they kind of didn't also factor in that wind and batteries are getting cheaper, and that the fact that nobody even wants to use coal. Even if they did have an option, people don't really want to use it. So there's a bit of a massive problem. And there's also a massive problem because it doesn't want to show you these slides. The most important ones of the whole damn thing. That's annoying. That's really annoying. They don't want you to see this information. Damn, son. Damn. Okay, they don't want it. They don't want you to see it. So what we're gonna do, because I'm gonna try and close down some windows and come back to those images, so you can see just as we're wrapping up. But yeah, I'm gonna hand over to man like Ninja. Ninja.
Yo, what's up?
What up?
Been brushing my teeth, I'm shining.
Gleaming.
Let me get back to my room. Okay, cool. Well, I'm just gonna drop hella gems, yeah?
Yep. Fire.
Let's go. Okay, so let me tell you guys something that I feel like the culture is sleeping on, and that's mining. Guys, the original computers that mined Bitcoin to build the original Bitcoin blockchain, well, the blockchain that exists today, but yeah, that was 2008, 2009, 2010 computers. What do you think is more powerful? My smartphone, my Samsung S10 now, or those computers? Why are y'all sleeping on mining? Are you crazy? Now we got Picoin, we got Bcoin. Are they worth anything now? No. Is there a possibility? High possibility. Shit, I'll be mining like 50 Picoins, 50 Bcoins a day. I've done the work. I don't need to work anymore on my mining. Like I signed up 50 people. Guys, you want to get your mining from Mr. Hardin. Mr. Hardin, drop your mining links. It's very important.
Oh.
All it is just pressing a button on your phone every day. And then these apps use a small portion of your phone's CPU, RAM, and internet. Facebook, Instagram, Twitter, they're using your internet and RAM and your CPU, and you ain't getting paid. You can get paid to walk on these crypto apps. There's TimeStoke, there's A-Box, there's eCoin Wallet. I gave you all these links in it, Mr. Hardin.
Yep.
Yeah, all of them. Yeah, Mr. Hardin will plug you on all these links. So let's stop sleeping on mining, okay? Mining is one of the greatest opportunities that we have right now. Turn your computer into a Dogecoin miner. Just do something. Do you know what I mean? There's so much mining. I'm actually looking to sell some of my Ethereum to actually buy mining equipment, but more on that later because I'm really not too knowledgeable about mining, like the technical side, but I'm smart enough to do it. Yeah, I mine 17 different cryptos. I think I've gave Mr. Harding most of them, but yeah, Mr. Harding will sort you out. Okay, are all of these apps mentioned safe? Heard some of these apps can be. Okay, well, is Instagram safe? You know,
No.
is
No.
Snapchat safe? Listen, like they've got my information. Okay, I might as well get paid now. That's it. They've got it. I've tweeted enough in my life. There's enough information about my life, where I was born, etc. I just want to get paid my info now. So yeah, stop sleeping on mining. Then I said it before, but I'm gonna say it again. Engine coin and Swissborg coin. Oh my God. If you guys are not on Swissborg, holla Mr. Harding, get some free Bitcoin by signing up. Swissborg coin, right now, I believe it's $1.20, £1. I predict it will get to $5 by 2023. Engine coin easily gonna smash $5. It's currently $2.50, $2.50. I've like 3x, 4x from investing since January. What else? Staking. Okay, don't sleep on staking, especially crypto.com. Holla Michael Harding for your crypto. Aye, 1 second. Where's my crypto.com card?
Gang.
Reflection. Gang. I've not got a red one. I'm not a baller like you, but yeah, I got the blue one. So yeah, especially on Binance, a lot of people don't put their crypto in the earning pools. I got like hella 1 inch in an earning pool. I got some Ethereum staked. You know what I mean? Just find ways to earn interest from your crypto. Like, be holding that shit. Like, yeah, cashing out is important into pound sterling as well, but we want to stack. Like Swissborg yield, crypto.com is really good for the earning pools. You can earn on Binance as well. So make sure you'll do that. Besides that, I'll take a question or two. I think that was enough, Gems.
Yeah,
basically mining, staking pools. What else? And engine coin and Swissborg.
Can you explain a little bit more in detail what staking is to people? Because they might think it's something to do with beef.
Right, no. So staking, you can either flexible stake or you can fix time stake. So you can agree to, say, lock up your Bitcoin for 3 months and then get a certain amount of interest, or you can do like flexible staking, where it's just it's like, instead of sitting here and getting no interest, you might as well sit here for as long as you want and get interest. Might as well just sit here, innit? Makes sense. Mm-hmm. So all opportunities to stake, do it, whether it's flexible or fixed. Guys, I've got stakes, yeah, that are unlocking every single birthday from my 27th to my 35th. No cap. I got like Hexcoin stakes, Cardano stakes. So I'm rewarding myself crypto on my birthdays. So I'm 35.
Mad.
Think ahead.
Think ahead. That's a sick one. Right, let's take some questions. Unfortunately, my thing isn't working. So my screen's just really not allowing me to share screen in today's call. Sorry about that, guys. So yeah, we'll take some questions. As anyone, you know what? Instead of doing it that way, I'm just gonna pick on people and just get them to ask a question, because
I like that.
I know people have got questions, but they don't ask them. So I think I'm just gonna do random fire at people and just get them to ask a question, especially on bonds, because I know for a fact that people ain't covered bonds before. So let's go Ravi Galani. Ravi, unmute your mic.
What's up, man?
What up? Thanks for joining us on the call, man. Really appreciate it.
All good. I was just thinking in terms of mining, and I wanted to ask if it's just Pi, and I don't know the name of the other app, but how can we utilize mining? Like, I know there's cell phone mining, but also on like computers and stuff like that. Like, how can we expand that?
Yeah, good question. That's all you, Ninja.
Yeah, sure. I mean, okay, I'm just give you a major plug, because I don't claim to be like, I'm really not I'm a crypto tech guy, but the number one guy I recommend to follow on YouTube is Tech Hustler. He's got like his own mining farm where he's got like 57 different smartphones and 19 computers mining 10 million different things. But yeah, it's quite easy. Like, you can mine like Dogecoin quite easily on your computer. Why not? You know, when Elon Musk tweets, you got some money right there. You can apply to mine Pi on your computer. What else? I believe it's not too hard to mine Litecoin. I'll be honest, I'm more of a phone miner. I'm massively into phone mining. The only reason why I don't personally mine on my computer is because my computer is a bit shitty, and because it's locked down. I'm the kind of person that needs to go to Curry's and try things out. I can't just buy a new computer. So I know it sounds like an excuse, but my computer's not mining because my computer's shit. So I've just been focusing on phone mining. When I get a new computer, I'll go hard on computer mining. But just check out Tech Hustler. He's got a lot of stuff to do with mining. If you anyone with a decent computer, you should be mining.
Also, anyone with over 50K to play with, I would highly recommend. I'm talking disposable because you never know. If you got 50K disposable, I would look into noding. Just because for some of the cryptos, they allow you to become an official node of their network if you've got the capital. And
Something
basically,
like that.
yeah. Again, hit up me or Ninja for questions on that. So thank you, Ravi, for your question.
Thank you.
Just had a question from
we got someone in the chat.
Yeah, Saif, unmute your mic, bro.
Personally, I'll go and Riot Blockchain. I'm invested in both. I believe in both companies. I know you didn't say Riot Blockchain. That's just a plug. But yeah, Argo Blockchain. I support that.
Yeah, I'm about that.
I definitely keep it long term.
I'm all about Argo, and shout out to Block. Search for ETF BLOK. It's a sick ETF for blockchain. You know what? Let me just fire another gem there for you to do your research on.
Quick one. You see BLOK. Where can I purchase that?
You should be able to purchase it if you on IG. IG.com allows you to get most. If you can't get it on there, I'm not too sure. eToro normally has most of the ETFs, but again, they're trying to stamp down on the ETFs just because.
Bro, I am not a fan of eToro.
Nah, no, that's why I don't really back it like that.
You know why? Yeah, eToro is so lame because they tried to become a 2-in-1 crypto and stocks app, and they didn't have the care factor to study the UX of like Coinbase and Binance. Like, there's just no competition. Like, it's just whack, bro.
Yeah.
Like they didn't even try hard. It's like they disrespected the crypto game by trying to make a like in theory, I would love a 2-in-1 stocks crypto app. To date, I've never found a good one.
No, it doesn't exist.
eToro tried to be that guy.
Doesn't exist.
Sorry. I said my bad. I came in late, but I'm listening though.
Nah, no worries.
Oh, that's my boy Fundo.
What up? Okay, cool. So what was the last crypto coin, guys? Last crypto coin that we mentioned just a second ago? Would have been Swissborg or Engine?
Swissborg coin and Engine coin. Go get that. Ninja said it.
And then the ETFs that I mentioned was there's obviously so you want to check out for cryptos, companies that you can look at that are on the stock market, crypto based. You've got Grayscale and Arca invested in them. Then you've got GBTC, ticker symbol, GBTC, and then you've got Block, BLOK. And then we also mentioned Argo Blockchain. Okay, cool. So let's go to the next person for a question. Let's go Nathaniel.
I'll go.
Oh, Mendez. Was that you asking a question?
Yeah.
Yeah, far away.
Yeah, I wanted to know like what is the best way to be like a passive investor?
A passive investor.
Yeah.
So to be a completely passive investor, that is probably where you would go to a fund management company where you would just go, look, I've got 50K, I've got 100K. Look, can you invest it for me? Or you'd go to a company and be like, look, I just want to put £500 a month in. You guys do the rest. That's where company, although there is going to be big fees on it. So I'd recommend doing that. That's the number one way that most people are passive investors. If you want to do that and you're serious about doing that, I can direct you to a company called Brew and Dolphin. I've got some contacts in there. They're one of the UK's number one companies for that, for asset and wealth management. Alternatively, I'd recommend reading a book called Money Master the Game by Tony Robbins. And he'll kind of teach, in that book, it kind of teaches you how to be a passive investor yourself without paying fees to somebody else.
All right.
Cool. Again, I've put my Instagram in there, which is at I am Mr. Harding. Any questions on anything for my links and referral links to any of the apps that I'm using, again, just get at me and I'll send them to you. So what is the ETF to buy the S&P 500 SPY? SPY. You got that one. There's actually quite a few for the S&P.
Man, the S&P 500 is boring, man.
Okay.
I'm encouraging people to buy that. We know that.
I'm not encouraging. Someone asked. Someone asked.
You don't want it. That's the answer. You don't want it.
Yeah, you don't.
That's not the one.
I'll be honest with you. I don't really back the S&P. And if my slides let me show you, it was going to show you that the S&P is going to collapse. Like the age of index investing has died. And there's basically loads of companies in there that are those fallen angels that have got really terrible fundamentals. And it's only the tech companies, the top, like Facebook, Amazon, Google, Tesla, that are propping the S&P up. That's why it's not collapsed. But if you remove them away, for the last 3-4 years, the S&P is actually going down. But people can't see that. So what you want to do is you want to really assess. In fact, the best way to check what the S&P is really doing is go on Yahoo Finance or go on my video that I've got on my course, and it will show you the difference between the S&P and the NASDAQ. And the majority of the top 100 companies that are in the NASDAQ are in the S&P. And then you'll start realizing, oh, damn, is that how that's performing like that? Is that it? Yeah. And then if you combine the debt problem and the bond problem, this is why Cathie Wood is getting so much heat, because the big money, especially Vanguard, who own the S&P ETF, like they don't want people investing in ETFs, because if they do, the Vanguard will collapse.
Yo, let me ask you a quick question. Yeah, if you had to pick one asset to invest in, so you can only have, your portfolio can only ever be fiat currency and one asset. What would that one asset be?
ARK Invest, hands down.
That's crazy. Mine would be Bitcoin straight away.
The only reason why I wouldn't do Bitcoin is because it's not diversified enough. So ARK Invest, if I invest in ARK, I get Bitcoin as well.
Wait, they pay out in Bitcoin?
Yeah, they're one of the biggest. They're pro Bitcoin. They're one of the main reasons that so many people have got into, like, the big hedges have got into Bitcoin, is because they are super bullish on Bitcoin. They've been advising Elon Musk on getting into Bitcoin.
I respect that, yeah, but this is why I choose Bitcoin. I'm gonna blow your mind with some easy maths.
Go on.
You know, so you know, there's only for you guys that don't know, there's only 21 million Bitcoin ever created, and there's 18.6 million in circulation. Satoshi Nakamoto is holding 1 million, so there'll only ever be 19.5, and there'll be like 19.5 million in circulation ever. So there's only like 900,000 to be mined, right? How many peoples on Earth? Do you know?
About 8 billion.
Yeah. So it's like 7,600 million, right? But let's just say it's 8,000 million, because every year 80 million people are born. Obviously, people die, but yeah, let's just say there's 8,000 million people in the world, and there's less than 20 million Bitcoin. That means there's one Bitcoin for every 400 people. Come on, man. Come on, man.
I like that.
It's just like, I don't need to go through TA.
This is why these chats are so important. You need to be in a group or with people that can counter your investment ideas, because if you're only around people that can tell you why your investment idea is good, that's not good. Like, you need to be around people that will give you
no, of course,
and cons. So no, that's what I'm saying to the group, innit? So this is my counter to your thesis on Bitcoin. Bitcoin, in my opinion, has a limited growth. Over 20 years, it's not going to be able to produce 100 to 200x every single year. Whereas I truthfully believe ARK Invest will be able to do 200 to 400% every year for the next 50 years.
Okay, you know what? I am not educated enough to challenge that. So I'll just leave it at that. But I'll definitely get my game up with regards to that. But right now it's still Bitcoin because that's the one that I know the most.
Yeah.
But if I study, maybe I'll change my mind.
Yeah, first. But guys, you see that what me and Ninja just did? It's important as an investor that you can do that. You need to be in a position whereby anything you're investing in, you can give it a bit of combo about it, a bit of banter about it, take some negative criticism towards your investment and figure out, okay, yeah, you've just said that, but what about this? Like, you need to be able to do that if you're investing into something. So we had Nathaniel ask, is it worth investing as a lump sum or drip feeding over time? Both, 100% both. Don't do just one. And definitely.
Can I give some very practical advice, because I know a lot of people here will be employees. Most people get paid either every week or every month. If you get paid every month, find your investing budget and then split that every week. Because in my opinion, it's better to invest £50 a week than £200 a month. Because when you invest £200 a month, would you agree?
100%.
Yeah, because if you invest £200 in one go, like, there might be an opportunity the week after, and you're like, oh shit, I'm already invested.
Yeah.
Like, let me tell you, yeah, like, because I'm an active investor, I actually invest. I don't know if this is going to make you sick or not, but I invest every day, several times a day. So I invest the second I get paid. Like, literally straight after. So, like, because I get paid 2 or 3 times a day now, like with clients and stuff, I get that money and I invest. Like, I save and invest straight away.
Yeah, man, I totally agree with that. And as well as the weekly thing, it allows you to be in a position whereby you can actually make riskier investments that will be high yield. Just because one of the problems with investing is, and this happened to me last year, is I was not liquid at all. What does liquid mean? I didn't have any spare cash available. All my money was tied up in investments. And it meant when Tesla got to a super low, I couldn't get in it. I couldn't get in Bitcoin at $9,000 because my money was all tied up. So this is why you need to be in a way where you're like, okay, I know that I've always got some money the next week to be able to invest if something drops to a crazy low price. So that's what I'd say on that. We'll take 2 more questions. So I'm gonna pick one of the regulars. We've got Homer on the line. Homer, I know you got a question, and we need to hear from some ladies.
I was gonna say mine's so wide that we do not have enough time on this call, but we'll have to do it another day if that's all right.
Yeah, that's fine. Give me a clue to what the question was about.
Spawns related.
Okay, so we've got some newbies on the call. Let's have a look, see who we got. Man like Will. What are you saying, family? I'll mute your mic. You're up. Is he there? Or is he putting the babies to sleep?
Well, I can't wait to get a new laptop, man.
Oh, you're not the only one.
My laptop's on its last. Are you like me? Like, you have to go to the computer shop and try it out. I can't just buy it on the internet.
No, I'm gonna get a Mac end of this month. But you know what the problem is? This is my problem now. Every time I'm like, yeah, I'm gonna buy this, I get scared because I'm like, I see a new investment opportunity.
Oh, you're such a fake.
And I'm just like, I can wait. I can, like, exactly like what happened this week. It was like laptop or Dogecoin.
I love them problems, bro. Literally, I keep telling my friends. Telling my friends. It's so crazy because, like, I'm not made or anything, but like, I'm the wealthiest I've ever been in my life at 25, and I'm the stingiest I've ever lived.
Yep, I can relate.
Like, I was living up when I was 21, 22, and I made like minimum wage, bro. And I'm thinking, bro, I make way more than that now. But like, why am I so much conservative with my cash?
Yeah, it's because the investment opportunities are just.
The budget part healthy, but the lifestyle's not lavish.
Yeah, I think
it's not lavish
the deeper you get into the game, you find it hard. And like, I remember the first time I watched the Warren Buffett documentary, which I cannot stress enough. Just go on YouTube, type in Warren Buffett documentary. Yeah. He goes to McDonald's and orders the same £2 meal every single day. Yeah. And if the markets are up, he'll spend an extra 2p. If the markets are down, he'll save 10p on his meal order.
No way.
Yeah.
I mean, you shouldn't eat that much McDonald's though.
Yeah, he shouldn't eat McDonald's, but he does part own McDonald's and part own Coca-Cola. So, you know.
I've got a quick question. Is it the Bloomberg documentary or the HBO one?
The HBO one.
Cheers.
Amazing watch. Absolutely amazing watch. Cool. So I'm gonna.
You know, he's an author.
Go on.
So sorry, quick amazing watch. Yeah, Seb can co-sign this because I watched it with him. Cryptocurrencies, Bitcoin, the future of currencies.
That was
Amazon,
amazing.
yeah, Amazon Prime 2020 documentary. Fucking sick.
Oh, I saw that literally. Yo, Dom actually said we should watch that. Yo, I'm gonna watch that tonight. Okay, so we had a question about Hoj, bro. It's a tricky one.
Okay, I can answer anything about Hoj. Give it to me.
Tricky one. Disclaimer.
Oh, like, what is the question? Do they just want to know about it?
So it's just a quick one on Hoj. Would you still say it's a good time to get in on, or has the ship already sailed? That spiky wick is really intimidating now, lol.
Okay, right. I'm going to give some very, very strong opinion on Hoj. Okay.
Not financial advice.
Yes, it's not okay. I am not recommending that you do, but I'm definitely recommending that you look into it. Okay. It is not impossible, statistically speaking, mathematically speaking, economically speaking, tokenomics speaking, for it to 100x from this point. That doesn't mean that I think it will, right? When you invest in ERC20 tokens, here's the gems. Invest minimum 0.1 ETH because the gas fee is going to burn you, right? You're going to spend 0.02 to 0.03 on the gas fee, which is very expensive. That's like 30 to 40 pounds. Don't invest more than 0.3, okay? If you want to go hard, do 0.3 if you've got a 5-figure portfolio. But for real, 0.1 is around what you want to invest in ERC20 tokens. When you invest in an ERC20 token, in my opinion, this should be your mindset. Your mindset should be, I am willing to lose all of it. And I'm only in this investment for the chance for it to 100x. Now, I don't want to overgas everyone, yeah, but my friend St. Jerome, who put me on this, he invested on the 29th of February when the price was 0.501, and he flipped his 500 to 112K. Now, that's kind of crazy, right? I got in about 5 days ago, and I've flipped my $100 into, I believe, $1,100. So do I think that you should get in? I neither think that you should or shouldn't, but I think that you should look into it, look at the tokenomics, and then think, am I willing to risk this 0.1 to 0.3 ETH? Yes or no? Are you emotionally ready to let it go? If you're ready to let it go, then yeah, go for it for the chance. But don't go for it with the intention of 10xing, because it might not happen for you, my bro.
What would you say about white papers?
White papers, you have to read them.
Because I know there's people out here not reading these white papers.
Listen, everyone here should have read the white paper of all the cryptos they're invested in.
Facts.
Because you know what's more important in the market? Your portfolio. When you're invested, my portfolio is more important to me than the whole market. What I'm invested in, I know a lot more than the things that are trending that I'm not invested in. That's not my money. My money's here and here and here, so I understand what I'm invested in.
Facts.
Study the market, then have your own little portfolio economy and pay attention to that first, and the market second after that to support your portfolio. Don't like accept that certain opportunities have gone. Hold your opportunity may have gone for you. It may not have. Have a look at it and then be willing to part with your Ethereum if you are to invest. Don't invest with the intention of trying to 10x. The market will destroy you if you try to do that.
And there's plenty more coins like that. There's going to be plenty more coins like that. Like, don't worry. Like, this is the beginning, guys. This isn't the end. Like the game hasn't just like, oh, the boat hasn't gone. Like it's here for a while, like at least another 4 years minimum. So don't rush, don't panic, don't chase the cash in it. Like learn to invest and learn to grow the peas. So Seb, your question, I'm gonna answer that in our one-on-one session because it's a very, very long answer. So I'm gonna I'm not gonna bore everyone to death.
Yo, let me just plug myself in, yeah. So starting in 4 minutes, myself and my boy Deo, who's basically like, he's really into Forex. We're doing a free Forex session. Now, I don't know anything about Forex, yeah. I can't trade. But if anybody wants to do that with me, if you got my number, WhatsApp me, I'll drop you the link. If you don't, hit me up on Instagram.
Put your number in the chat, bro. Put your number in the chat. I'm just posting all my referrals in the chat now.
Why not? Why not? Why not? Yeah.
My links to B are in there. My links to crypto.com are in there. Celsius is in there. Swissborg is in there. If you're not on that, get on that. Luno's in there. Coinbase links in there. Binance is in there. Yo, my Coinbase link's not even working. Rah. It's a bit dead. And anyone on YouTube, please like, share, and subscribe. You're a waste man if you don't.
Yo, Mr. Harding.
Yo.
What's your schedule saying this Thursday, 9 p.m. to 11 p.m.?
For you, my broski, and if it's any of your people, I can make it live.
Because myself and Deo are gonna do Blockchain Sensei's episode 4, full-on wealth chop. Guys, Instagram Live now allows 4 people to be on the call.
Jeez.
So me and Dale are gonna host it, and we just want unlimited guests, and it's gonna be unlimited wealth chops. It's gonna be like no filters barred wealth chops. Like you can drop anything, like even flips and hustles, right? So for example, let me just share some quick entrepreneurship game because my boy Seb put me on this, right? Literally, if you can learn to help people increase their wealth and or generate them business, you'll make money for the rest of your life. As soon as I learned to be the plug, oh my God, yo, literally, I just learned, yeah, to get Mr. Harding's students, like my students who I was overwhelmed with because I had too many. Like as soon as I started passing people on to Mr. Harding, I'm thinking, oh wait, I can be a broker, I can be an agent. Oh, I thought I'm not tied to anything now. I'm just gonna help businesses get business. If you can be in the business of helping people get business, you've won. Trust me. And I only learned that like 2 months ago. Seb put me on that.
Yo, shout out man like Seb.
Cheers.
Mm.
Oh,
it's still good.
Go on, we got 2 minutes left, so we can quickly take this last one.
Yeah, you said your YouTube. What's your YouTube?
I am Mr. Harding. All the links should be coming through in the chat right now. If they're not, if you don't see them, just hit me up on Instagram and I'll send you everything. I'll send you the links to the free course and everything else. But hang on a minute, let me just find that now, make sure that's there.
Well, I'm going to jump off to my next class. Anybody wants to jump in my class? My number's there, WhatsApp me. Yeah, 9:30 to 11 p.m. Forex with Dale. And I don't know anything about Forex. My boy's teaching me.
Yo, guys, it's been an absolute blast. It's been amazing. One love. Yeah, man, let's not keep this a secret. Let's share it with as many people as possible. The YouTube is going to be replayed on, the replay is going to be on YouTube. I've just posted the link to the free course. Again, if you want to book me or Ninja, hit us up. Instagram at I am Mr. Harding. It's been a blast. Thank you very much. Let's level up.
Respect. Thanks for your love.
No worries.
Time.
Love, love, love.
Thank you.
Take care.
See you in a bit. Bye, bye.
Thank you.
Bye, bye.
Cheers, bud. Nice one. Take care.
No worries, man. See you in a bit. Bye. That's the Instagram.
Thanks, bro. I really enjoy.
Thank you, man. Thank you. Hope you took value.
All right. I'll definitely text you, all right? I'll definitely text you.
No worries.
Because I want to learn a lot about the bouncer and the passive income.
Yeah, man. Hit me up, man.
Yeah, definitely. Yeah. Take care. Yeah.
See you in a bit. Bye, bye, bye.
See ya. Yeah. Bye.
See you later. See you later, our official mono. Oh, don't know if he's at the screen.